Valens Research, Uniform Financial Analytics.
Clorox, obviously, for those of you who don't know, makes Clorox. It's a bleach company. It doesn't just make bleach, it makes plenty of other stuff. It even makes vitamins in reality. But when you look at Clorox, what's so telling about this business is when you analyze this company's strategy and this company's performance, if you used as reported metrics, you'd be concerned about Clorox. Not only is Clorox a middling business that has basically, I mean, not middling, it's got 15% ROAs, it's pretty healthy, but ROAs have basically been flat and even have been slightly down in the last 4 years. You'd say, okay, as the company's been reinvesting in its business, right? It grew by 10% and then it grew by 21%. As it's been reinvesting in its business, hold on, this company has not been able to do anything, right? It's not been able to increase profitability at all. Nothing that it's doing is actually creating value for the business. So when we look at the uniform accounting data that we can see returns haven't been declining. Returns have actually been rising in the last 3 years as it's been reinvesting in the business. As it's invested in things like vitamins, as it's invested in things like new products that it wants to issue, et cetera, returns have been ramping up. This all of a sudden also helps us make sense of why this company would trade, again, at a 25 times PE. When you've got a company with declining returns that growth is doing nothing for, trading at a multiple above the market makes no sense. When you've got a company that's improving returns and has been for the last 10 years, and you've got a 25 times PE, well, all the market's basically saying is you're going to keep on doing what you've been doing. All of a sudden, Clorox makes sense. Clorox isn't a short, right? Like it looks like using bad as reported data, Clorox just looks fairly valued.
Valens Research, the world's leading source for uniform financial analytics.